All right, well, let's get started here. Thank you for those of you who are joining us live and for those that will be viewing this on a recording. We're thrilled to have you here we're going to cover an interesting topic, one that I'm excited to dive a little bit deeper into, which is securities-based lending. I am joined by Todd Sudak, who was recently promoted, I think, Todd, right, as the
Yeah,
head
that's
of
correct.
digital lending and alternative assets at Broadridge. Congratulations on your promotion.
Oh, thank you very much.
So, and by the way, Todd, how long have you been at Broadridge?
I've been at Broadridge for a little bit more than 3 years. But predominantly focused initially when I joined on the SBL space. So that's the space that I've come from.
Mm-hmm. Great. Well, thanks for coming on. I need to give a little quick disclaimer. This webinar is intended for educational purposes and not intended to be used as investment advice. And I will say, nor is YCharts or Broadridge acting as an advisor regarding client funds in any way. So glad to have that out of the way. So, Todd, you and I met about a year ago, and you started to introduce me to securities-based lending, and um, many advisors know about it. Many others do not. Many may have a perception that it's not right for them or they're not big enough. So the things I hope we can cover in today's webinar, I know you have 4 short slides you're going to go over, but the things I'd love to cover is what exactly is securities-based lending, what individuals and advisors is SBL applicable to, and who may it not be applicable to? What are the benefits and complications of SBL? And how does Broadridge address these complications? And, maybe a little bit about what's the future of SBL. Um,
Sure.
for those attending, again, the recording will be made available. For those attending or registered, recording will be made available. And by the way, we do have Q&A that anybody wants to pop a question in for Todd or myself, please feel free to do so. So you ready to head into it now that we got the disclaimer out of the way, Todd? And I can start to
Absolutely.
relax, not having
Yeah.
that on my mind? All right. So I'm going to, you put together a couple of slides and hope you don't mind if I interrupt you a little bit, but we're going to go over a couple of slides to get the basic grounding. And again, these slides will also be made available for anybody who wants them. So why don't we dive in? A couple other pieces of information, some pictures, and and we'll talk at the end about how you can get a hold of Todd and how you can get a hold of me or my team if you wanted to. But Todd, why don't you take things from here? And apologies, I will interrupt you as you go along.
Sure. Yeah, maybe I'll tell you a little bit about the offering and the history of Broadridge and SBL. So the company that I mentioned that I started with at Broadridge was named Rockall. It's an Irish-based uh, company that was purchased very happily by Broadridge in 2019. They bring over 20 years of experience in this space. They have created a platform, and that's the platform that one of the products that I lead that has over 180 billion in AUM. So they're a market leader in terms of how much SBL is flowing on the platform. And the way we've approached it is we've started and we talk to and look at some of the largest clients in the world. So the system itself actually scales to some of the largest clients, as you can see on the right. But we also have firms that are just starting out in SBL. So we kind of cover the gamut. I think what makes the company and the structure very unique is, we're a SaaS-based organization, so it all comes pre-plumbed. We go out to the market, we pull all the information together, so all of the information about what you're borrowing is brought together. We'll cover that in a little bit. We really look at our client base as our best source of inspiration, and we constantly meet. I'm sure you guys do that as well, Sean, where we constantly meet with our clients to understand what we can do better. We offer a lot of different networking events. Um, Last but not least, it's very stable ownership, and we invest quite a bit, almost 30% of everything the company makes back into the roadmap, and it shows as we continue to progress in this exciting space. And as I mentioned, it's an area that, where once we start to work with clients, both on the bank side, both on the REA or BD side, we see growth. We see an average of 20% growth per annum as we start to work with them to get more confidence in SBL. So that's just a little bit of background on the firm.
So
Yeah,
that tells me you've got ample ground to teach us a little bit more about SBL. You've been in the
sure.
business, you understand it deeply. So what is SBL?
Yeah, so I mean, I think SBL, what I always say to people is SBL is a really, it's one of the best kept secrets around in terms of how an advisor can offer holistic advice. So at the end of the day, the first thing you usually say it's similar to a HELOC, but it's for your non-retirement portfolio. So and it differs from traditional margin as well, which we'll talk about in a moment. But ultimately, it's a non-purpose line of credit that you can open on your non-retirement accounts. It's available to individuals, it's available to trusts, entities. The thing about it that makes it it's usually a very quick turnaround process to get it approved because it's collateral based. It is based on the value of your portfolio. And the way that works actually is the banks come up with a policy that we help support. And the policy says this is how much you can borrow on certain asset classes that ultimately allows you to create a pledge. And once you have the pledge in place, you can borrow against it. So it's a revolving line of credit. As I mentioned, different than other methods of borrowing. It does tend to be much more quick because, of course, you're using the collateral, and it's not necessarily based on, although that can vary by bank, by your personal credit worthiness. And last but not least, it's usually a painless and in comparison to other types of loans, simple application and underwriting process. The uses are on the right here. Just really quick. I mean, we see clients using it for real estate investment. We see them using it as bridge loans. We see them using it a lot on taxes and tuition. So during tax season, advisors will come to clients and say, there's a strategy you can put in play here to leverage this during tax season. But ultimately, the only thing that I usually say is it's not eligible on a retirement account, and it's not eligible to buy more securities. Those are the two things that you need to be aware of with an SBL. And
Got
one last thing I would say, and we'll get into it in terms of who it's applicable for. It tends to be there's certain regulations in place. It tends to be above 70 to 75,000 as a focus, but that's not to say you can't borrow below that. But a lot of the banks do tend to focus this above $70,000 as the pledge amount.
got it. And Todd, well, maybe I'll ask you in the context of this slide, okay, to move to this slide on the advantages. And
Sure.
okay, I'll let you hit it, and then I got a question
Okay.
for you.
Yeah. So the next question that we are typically asked, and I mean, I think a lot of this is education too, is like, well, like I'm an advisor. I don't really feel comfortable speaking to my client about debt. And I mean, at the end of the day, debt is leverage. And if you think about that in that regard, using leverage is not a bad thing in wealth accumulation. It's ultimately a way to get to your end goals. So a lot of the things that we usually talk about is there are remarkable advantages, and that's why I started by saying it's one of the best kept secrets to having a revolving credit line in place like this. First and foremost, it's an alternative to liquidating your portfolio. So if you have a financial plan, you're very closely monitoring that. Something occurs, whether it be something like an unexpected emergency, that can derail your plan. So first and foremost, this is a great alternative to that. It keeps your investment strategy in place. And I always say that is what it really helps protect the financial plan. It can avoid capital gain taxes in some cases, but I ultimately think that it is a great way for a client to stay on track and have that liquidity as they need it, and then pay it back when it makes sense. And then on the flip side, for a financial professional, first of all, I mean, I have many financial professionals that I've spoken to where they look at this as uh, holistic advice. They have stories about how they've helped their clients. Clients have come to them in somewhat of an emergency or wanting to do something, thinking about liquidation, and the advisor has helped them come up with a plan to manage that, and they've been able to accomplish it while keeping their portfolio intact. So it's really a great way to position that as holistic advice. I think the other thing I always think about is and we'll touch on this, is SBL has traditionally come from wirehouses. That is a place where it was born in terms of and where really those balances are the largest. And this is an offering that a wirehouse definitely will provide. So being an independent advisor, it'd be important to know that this is a great way for you to continue to differentiate yourself and keep yourself working closely with your clients. So those are just some of the benefits of it. But I always start off by saying it's a really great way to keep a client on track for their financial plan.
Yeah, and I have direct personal experience with SBL. My wife and I decided a couple years ago that we would like to redo our kitchen. And anybody who's ever redone a kitchen, sticker shock comes in really, really quickly. And, we were basically faced with a do we or don't we do it. And then once we said we wanted to do it, we said, wow, does this mean we have to liquidate a meaningful portion of our portfolio in order to fund this? And this is just a terrific offering that we had where we get to keep, like you're saying, our financial plan going as it is, but we also can meet, we didn't have that much money liquid. We're able to meet that need. My question for you is, you touched on at the end the repayment. How does that work when eventually, like a HELOC, you actually need to pay back what you took out? Is interest taken out along the way, and when and how does principal get repaid?
Yeah, I mean, well, it depends on the structure of the loan, but in a variable loan, you pay the interest as you go along, and then you would pay the balance back when you're ready. So you can pay it off a little bit at a time. There's a lot of flexibility in how that's structured. And then there are SBL. There's a lot of variety of SBLs. That's a common one. There's one that has more of a structure to it where you pay it at a certain pace. But ultimately, because it's a non-purpose line of credit, it gives you flexibility, and a lot of the variable lines allow you to do, as I mentioned, where you pay it off as you can, pay off, and then you would pay off the interest and the principal at the pace that you see fit.
Okay. And you also mentioned, hey, those who are in a wirehouse or came from a wirehouse, they may have familiarity. And then you mentioned, but this is actually applicable to different sizes of advisors. Is SBL at the stage now where if you are a sub 1 million in AUM firm with 50 clients, are you, with the right partnership with companies like Broadridge, are you able to offer SBL?
Absolutely. Totally. I mean, I think, as I mentioned at the beginning, and maybe we could think a little bit more about that, but it started with wirehouses, and it started with ultra high net worth, and it's been coming down into high net worth and mass affluent. So this is absolutely applicable. And you can think of the banks that we work with as as not a competitor to you. They would be your outsourced private bank. And I think some of the things to think about is there are, so for a firm like you've explained, an advisor has an AUM such as that, it would still be very applicable for them to do it. And there's nothing stopping them from looking at this. The things to take into account would be and where the money is actually custodied. All of the banks that we work with handle a variety of different custodians for it. So that would typically be the first question that would be asked. But ultimately, as an advisor from that type of client profile, absolutely applicable. It's not just for wirehouse or ultra high net worth at all. And the banks that we have on our network would work with the advisor to determine the best path forward, depending on the custodian, depending on the nature of the assets, depending on the time that's required to close on the loan.
Awesome. Well, tell us how it works.
Yeah, but one other thing I forgot to mention, maybe it's good news for just a little bit more for the advisors on the call. The typical open loan, just to your question about when to pay it off, it usually lasts about 2 to 3 years. So they do stay open for a period of time. The credit line, the commitment may stay open in perpetuity, but ultimately an individual line being utilized and then like drawn upon and then paid back typically is an average lifespan of about 2 years.
Great.
Oh, so a little bit. So, as I mentioned, I mean, we have a very robust platform in terms of our ability to manage both our banks, in terms of the banks being on our platform and how they assess credit and work through their loan underwriting platform or process. We also have a front end that's available to those banks affiliated advisors, but we also have a front end that's available to non-affiliated advisors, which means that you can work with any bank. So at a very high level, what this diagram is really showing is we have our advisors on the left, they have their loans, they have the ability to access our platform. On that platform, which is our SPL platform, we have our wealth lending network capabilities, which allow advisors to do all kinds of interesting stuff. They can understand how much their clients can borrow. They can look at an individual bank's credit policy and determine how much can I borrow. We can also help them. We have advanced capabilities that help them understand which of their clients may really need an SPL, where we actually run algorithms over it to help an advisor understand, like across their client base, these clients uh, may really need one, and if you opened up a line for them, they would definitely use it. So we have capabilities like that to help predict where that would actually occur, as well as we have a tie-in to our marketing platform. If you would want to launch and talk to your clients about an SBL nurture campaign, we can introduce that. We also have the ability to launch the application, and then from that flows back into our banks, and then they go through their underwriting and approval process. There's a way for them to communicate back and forth, and ultimately they take that under, as they accept the loan and they book it, it starts to become monitored. They work with the custodians to get it pledged, to ensure that that's set up in terms of a tri-party agreement. Then the loan is set. And then what we also offer is, as that loan is set up, Sean, we offer the ability to make sure that the advisor, and the client, of course, but the advisor most definitely is kept in the loop with any of the changes that occur to the loan, whether the client is drawing on it, whether the client is paying it off, and also whether or not the line. It doesn't happen a lot, but if the line happens to go into a status of margin, the advisor would also be notified to help mitigate that. It doesn't happen very much, though, actually.
Great. So I get the baseline of things, and listen, the reason I wanted to have you on is I from a personal level, I just found this such a win-win, you know, and you talked about the historical profile, ultra high net worth wirehouse clients. Like I'm neither ultra high net worth nor a wirehouse client, but in my home, it just made a ton of sense. So intention number one was just make sure everybody understands the basic mechanics of this, and that it's available regardless of the size of the advisory firm, and to a certain degree regardless of the size of the underlying client's assets. Um, so I know your mission now is to continue to educate people, and to the degree your company earns an opportunity to help advisory firms out and their clients, great. But what should we know about the future of SBL? Are there asset classes right now that wouldn't qualify that may in the future, or what's the future look like for SBL?
Well, I mean, I think that maybe before I talk about asset classes, which there are a lot of interesting developments on that side, I'd say the future of SBL. I mean, traditionally SBLs have been a little bit more reactive. Like your story is very typical. Like you had a need, you reached out, you came up with a line of credit, you did it quickly. So it's really great. I do have a view that similar to a margin account where it's opened upon the account opening, there can be a proactive aspect of this where an advisor sits down with their client, potentially not at opening, but during a annual financial plan review, and says it might make sense to have this revolving line in place. You don't have to use it. You don't pay for it if you don't use it. But at the end of the day, it's a good idea. So
Mm,
I view that as being more common, as the knowledge of SBL and the use cases for it as people use them becomes more widespread, and also as advisors get more educated. Like we're on the call today talking about this,
mm,
advisors start to understand this is a really good thing. So I think it's going to move from reactive to proactive in terms of that dialogue. I think the other things that will make it quite interesting, as you mentioned, is there is obviously a shift in a focus on alternatives in the market. So we're seeing a lot of questions about how to lend on alternatives and classify those. So that's an area where I think SBL, again, as the portfolio, the how it is constituted changes. If you start to bring in structured notes. You start to bring in things that are, maybe private credit or equity. As that starts to change, the need to borrow against that and loan against it will ultimately evolve, and it already is with it. So that was another area that I'm really excited about in terms of offering that. So I think those are two areas as it continues to evolve. And as I mentioned before, like I see SBL today relatively as an isolated function. It
Mhm.
still is a bit isolated. And I think that as it becomes more as lending itself, if we just take a step back and say, what about lending for the advisor? I think as advisors continue to embrace their client will come to them for holistic advice, and the client wants to understand what their options are in terms of their financial plan, to how to buy their home, how to put a credit line in place, how to think about that side of the balance sheet, which we will say that's a different side of the balance sheet than just growing your assets.
Mhm.
I'm starting to, I'm of the opinion that integration in the RA ecosystem will become more needed. So the ability to integrate into a proposal generation platform, then the need to integrate into a financial planning platform, the need to integrate into a marketing platform, like all of these things will start to evolve as SBL becomes more mainstream.
Yeah, and thanks for talking about the workflow part of it, because it's interesting that you're saying everybody is not, the use case isn't always people like myself who would like to redo their kitchen in a reactive mode. You're saying it's actually an asset and an additional service on the front end when you're prospecting and talking about somebody that may join you. It's another added offering, and it's also part of a healthy part of a financial plan and talking about the debt side of the balance sheet. That's very, very interesting.
Yeah, absolutely. I think it is. And I mean, if you think, I mean, if you take a step back and say, if you think more like a business and say a business would not look at debt as a bad thing, they look at it as leverage to achieve their goals. You
Hmm.
start to translate that into the ideas um, that an individual can take to build their wealth. I think it starts to make a lot more sense.
Hmm.
And as that part of the equation starts to unfold, is like, what holistic advice can I bring my clients? How can I really help them understand how to manage both of these? What's their attitude towards debt?
Yeah.
Similar to what their attitudes towards investing is. Putting that together in a tailored plan, I think that is the future of lending in the ecosystem, and SBL is a huge part of it, because let's face it, that is where the portfolio that the advisor is managing is tied to the way that you can leverage against it.
Ah, that's awesome. Hey, and I'd encourage anybody else who has a question, please feel free to put it in the Q&A. But Todd, I do see a question here. That's a great one. So I'll read it. For the lending network you've referenced, once the application is submitted, are there banks behind the scenes bidding to provide that loan? Can you kind of outline a bit how that works with the bank tie?
That's a great question. I mean, ultimately, yes, banks that are on the network will in the diagram that I've shown will compete. Where so if someone comes to the network and wants to submit a referral, we have our premium partners that will take a look at it and come back and work directly with that advisor. So I would say it's short of a lending tree model. It's actually the banks trying to understand what the client is looking for and then coming up with an offering for them. It's not just price. It can be based on advance rate. It can be based on time that it needs to be closed. There's a lot of factors that go in there, but ultimately, yes, you'll get a competitive offer. So the way that it works is exactly that. It's actually at the point of submitting your referral into the network saying, I have interest, I would like to hear more. That's when the banks who are on the network will start to reach out to understand what they can do to help satisfy your need, and come up with a tailored response. And then the bank that is successful will move ahead into an application. So you probably wouldn't be in a state where multiple loans would never get to a point of being approved or underwritten. It would usually say this is the one that we'd like to go with, and then that bank will take it all the way to completion.
Awesome. Audience, if there's any other questions, please feel free to submit. Um, but I would probably maybe wrap up at my end. Again, let's go back to why did I want to have our audience hear more about SBL? Because I thought it was great. for my use case. And it sounds like my use case doesn't need to be the typical one of it being reactive need. From an advisor standpoint, love the value proposition which is you're not saying goodbye to AUM as somebody liquidates something to go make a purchase or whatever. You're able to keep your client on their financial plan, and you're also able to do something really creative that meets their needs and is another way that you can say yes to your clients. So love it. And it sounds like, Todd, that Broadridge has a neat offering that makes it simple and easy for advisors, large advisors or small advisors. If anybody on listening to this webinar, watching the webinar now or in the future wants to learn more about this and how Broadridge can help, how do they reach you?
They can reach me at the email that's here, and be happy to talk more about it and refer them to, we have our portal. I can refer them to take a look and get more education. But yeah, I'd be happy to talk to anybody who has an interest. Just email me at my email address over there on the screen.
Awesome. Well, I would just like to say thank you, Todd. Super interesting, super valuable, two-way valuable offering. All good for the client, good for the advisor, and thanks for letting us know a little bit more and how Broadridge might help them with these types of needs.
Thank you so much for the invitation, Sean. I really appreciate it.